My friends, what is going on? Overall, it's a great day. I tweeted out earlier one of my favorite little memes where it was basically just this guy right here. I love this dude. His memes crack me up every single time I see him. But it's basically just me and the boys celebrating a 5% pump after a 70% dump, and that's absolutely what it felt like today. But anyway, let's kind of look at the chart and kind of see where we're going. All right. So overall, AMC followed the market, which is what I said it was going to do. It is going to be trading with the market. And I think it'll be trading with the market till one day it's just not. And sometimes historically, you can see where once AMC drastically starts deviating from what SPY is doing, then that's where we've had some of our biggest AMC runs. But right now, we're pretty much tracking with the overall market. As far as candles go or anything along those lines. We had a nice solid bullish candle today. Only difference would have been I would have loved to seen a little bit more of volume attached to it. But overall, throughout the entire market, as I was watching today, it seemed like volume in the morning was great, pretty much all across the entire market, and then it kind of dried up and it went pretty flat. And then right at the end of the day, we had a nice little spike right towards the end of the day. So, and you can kind of see it. We'll go in here onto the 15-minute time frame. So, all right. So let's see here. Where are we at? 31st, right here. So we started out the day, came out of the gates with a nice volume candle. So all throughout the morning, let's see here up until about, let's see here, and this is, so the first 2 hours of the day really is, or about hour and a half, we saw some decent volume moving the entire time, which is good. Anytime we see those moves upwards, we want to make sure that we see some volume coming with it. And as you can see, relatively to the range, it was above average volume. It wasn't spectacular volume, but it was at least above average volume, which is what we want to see. And then it just kind of disappeared throughout the entire day. But then that very last candle of the day, once again, above average volume, once we saw that nice little push above 16. So overall, to me, volume-wise, once again, I would have liked to seen a little bit more overall as a kind of a continuation pattern. But for the most part, as far as I'm concerned, today was, about as good as we could hope for, up about almost 7% on the day. And so as far as I'm concerned, give me all the positive 7% days you want to give me. I noticed earlier when I was kind of looking at it, so I'm actually going to go down to the 5-minute chart. So as far as intraday is concerned, if we do a fib from the very bottom, so where we so far have reached our low from the June run-up, if we do a fib from right there to the top, okay, so look, this is when people tell me like TA doesn't work on AMT, and that's exactly how I imagine you sound whenever you say things like that. Here's just why. So if you look from the bottom to the top, where did we see the big bounce up in the continuation pattern? Oh, amazing, right in the golden pocket. Okay, so now, if you go back, where did that bounce happen? So let's go to the top. So before, pretend right here, all right, that none of this existed yet. When it came down and it bounced, where did it bounce? Right at the 0.5. This doesn't happen by accident, people, okay? TA works. Even though, yes, I agree, AMC is a very heavily manipulated stock. I've always said they all are. Do I think AMC is more than others? Yes. I think all stocks are manipulated by algorithms. However, they still follow TA. So we got a 0.5 bounce there before the continuation of the trend. Not an accident. Up here at the top, that bounce from the 0.5 turns into a bounce at the 618. So where would I anticipate seeing some bounces? Well, like we always say, the 382 and the 0.618 are your two most common retracements, okay? So I would expect us to retrace a little bit anywhere between right around that $15.10 level. I would also anticipate a retrace. We could go to $14.76, and we could also come back down to $14.50. And I actually think $14.50 is more than likely going to happen. And I'll explain why in just a second. But once again, TA works. None of this is an accident. All right? Sorry, I can get a little preachy because I hear it all the time. Now, let's go back to the daily. Let's look at some stuff here. So number one, let's start looking at our wedges. Okay? So as of right now, that wedge one that I talked about in my video, kind of my most short time frame wedge, which, you know, short time frame is relative. It's really pretty much tracking for about 6 weeks now. So we've, as you can see, lots of touch points going down. If you do, I'm sorry, we're going to go right back to the 15 minute, but if you look in that 15 minute, like I tweeted out earlier, we have broken out of it, and right now we're just kind of flagging right here at the end. So tomorrow we could either come back in and retrace and find support and then push back up, or we could retest the top of this wedge, which I would imagine, what I say, that 15.10. Yeah, I mean, that would definitely could be a top or retest of the top and go back in. And once again, the wedges is more about the areas. It doesn't have to follow the specific lines exactly. So wedge one looks good. We are on a breakout pattern there. So wedge number two is going to be the one that I used from the all-time high. So let's look at that one. Once again, lots of different ways to draw wedges. So this was the one that I was using the all-time high as a reference. And once again, you can see, I mean, it doesn't take a genius to figure out. We got lots of touch points on the downtrend. We got lots of points, touch points on the uptrend. And when I say uptrend, I mean the top line and the bottom line. Obviously, we haven't been in an uptrend much lately. But when you look at this one, I said it was a good, strong possibility we could kind of ribbon back up into it. And this could even actually be a little bit of a bear trap here, which, in my opinion, that's kind of what's been happening on the market already. I tweeted out earlier today, it's like, oh, okay, everybody's gotten so comfortable calling out downside for the last 2 months. They just seem like they think it's going to last forever. Okay. So anyway, I think we could be seeing, if we keep a continuation pattern moving here, that we could look back on this and be like, oh, that was a hell of a bear trap right there. The other wedge that I was looking at is one that Dave pointed out. So obviously, if you don't know him, it's Dave Marino Jr. Follow him on Twitter and his YouTube channel. He does awesome stock analysis. But anyway, which is kind of this one from the big June run where we had, you know, lots of touch points and it touched here. So those are the three wedges that mainly I've been tracking, and you know, everything's tracking great right now. So let's do this. So, and let me change colors here. I don't know how well you guys can see this, so let me just change colors. Actually, I like blue. I'm going back to blue, but I'll make it bigger. There you go. So this 1450 line, I think, is going to be something that we retest, mainly because it is going to be what acted as support, because it was our big resistance before our June run. So I was talking with somebody about this today, guys. Think of stocks is kind of like breathing in and pushing the air back out. So think of stocks as your lungs. So, you know, every time we breathe in a little bit, we also got to breathe out a little bit. And healthy stock movement, just like a healthy lung, would be taking air in and breathing out. Now, unfortunately, we've been doing a lot of breathing out lately, okay? So I think we're due for some solid breathing in, but a good, solid, healthy retrace and growth of a stock is what we want to see. The faster it explodes up into the atmosphere, the faster it is going to be, you know, tumbling down. Like I say, you know, we'll take the stairs on the way up and we'll take the elevator on the way down. So I think a healthy retrace of that 1450 area is going to be something that we could anticipate, unless kind of the overall market just keeps rallying and rallying, which I give it 50-50, you know, right now. now. I know it can go up or it can go down. Oh, so good job. But anyway, I think we might see a retouch or a retest of this top line support of that 1450 before we see a continuation in a move upward. I think I saw that the jobs report was going to come out, and that the White House today was already like talking about how like, oh, remember, even though the jobs report's coming out, lots of people have been sick with COVID and things of that nature. So it kind of sounds like they're already prepping for terrible job report numbers, even though Biden's out there talking about how awesome he's done with the economy every single day. Laughable. That's not political. That's facts. So anyway, I think we might test that 1450 again before we see a continuation higher. But we might also kind of see a continuation higher first and then some retesting and some pulling back. So like I said, one of the fibs, once again, I think it was the 618 fib I just covered, was one of those retests. So that, once again, that wouldn't surprise me at all. And that would be some of our long-term support. Another long-term support that I'm going to be looking at is when we zoomed out, and honestly, this was a fail on my part. So when I'm wrong, I want to be the first to admit that I'm wrong. Going back to August of 17 all the way up until May of 19, so for almost 2 years, where we bounced right here was solid support for almost 2 years of trading with AMC. And you could argue that was where before the malicious short attack started. I saw somebody today kind of saying they thought it started, right back in here. And that's definitely could be a valid argument, but I don't think there's any doubt in my mind this massive gap down could be when people started going, okay, we're going to start attacking this theater chain. But anyway, so those are going to be the two key areas of support that I'm really watching. Really want to see 1450 hold. If not, we want to see kind of that 1350 hold. Otherwise, like I said, I made a case for $10 the other evening. That's definitely still a possibility. We're not out of the woods yet. From a candlestick pattern, we could be developing here on the daily what's called a 3 white soldier pattern, which once again, sorry if this is ever blinding. Anytime I pull up these screens. But it's basically the way these kind of 3 green candles line up right here, which is basically a solid sign of reversal. Now, as you can see down here, it usually shows some volume increasing with it. And so I would definitely like to see some volume start stepping into the game here to really feel good about saying a reversal is in the works. And when I say a reversal is in the works, my friends, I'm not just saying we're just going to go straight up from here. Once again, we're going to have, pullbacks along the way. Just like in the downtrend, we didn't go straight down. In the uptrend, other than the gamma ramps, we didn't just go straight up or anything along those lines. Here's a real solid, in my opinion, example of a healthy uptrend, which is from that low in August where we went from the 28 back to the 52. We saw good, solid, healthy retraces the entire way. And that's what I expect. And, someone was asking me well, don't you just want to see a moonshot or anything like that? And once again, of course I want to see a moonshot just like anybody else. Don't be dumb. But at the same time, this $20 area for AMC is some of its most untraded ranges. And so I wouldn't be surprised at all. Let me kind of zoom out so you can even see it better. So, starting right here is $20 all the way up to $30. So when I zoom out this far, let me just get from the very beginning of AMC. The $20 area is the most untraded area on AMC's chart, obviously, other than all-time highs. So I think we're going to have to grind a little bit out of the $20 area. But once we get through that $20 area, I think the 30s and the 40s will go relatively quickly. And then I think we'll need to do a little trading up in the 50s and the 60s and the 70s. And let's be real. Everybody's going to be real excited about that, myself included. We'll all be feeling real good once we start seeing that. The reality is most of us are going to start feeling real good again once we get back to those 30s and those 40 range. Once again, I'm not declaring victory or anything along those lines, but we'll all be able to sleep a little bit better at night once we get to that point. So basically what I'm looking for, if we continue to uptrend, where's my big long? I know that's what she said. No. Oops. Yeah, this bad boy right here. Once again, I've said it before, I'll say it again. This is going to be the big kahuna to break. But that's not, that's not even on the books till we hit that, $25, $26 area, just right here. Because once again, it has provided major resistance, and we tested it and it's always been drugged down. So that's going to be the big line that I'm watching. Nope. Yes. So this wedge right here is going to be our first level. Like I said, we're breaking out of it right now. Technically, we've broken out of it and we closed above it. That's a great sign. We need to make sure it's not a fake out though. So we want to see like a retest at the top of the line. Like I said, let me get in here one last thing. I say one last thing all the time, and then I always wind up talking for like 10, 15 more minutes. So I apologize for that. You don't like it? Don't freaking watch. So yeah, and actually even on the 5 minute, we you can see we sort of ribboned around it. Let me make that line a little bit thicker for your viewing pleasure. So you can see we kind of bouncing around. So this all looks good. So we just want to see continuation of our overall bullish trend, regardless of what the market does. Now, obviously, if the market keeps ripping right alongside us, that is going to help. But other than that, our next big gap, we still have a gap to fill up here, basically from $20.15 up until about $20.50. So that's going to be the next, big target area, that we want to see recovering from. I still think we're going to be in for a relief rally overall up until we get to those next Fed meetings in March. But overall, my friends, that's what I got for you today. It's late. I apologize for this video getting out so late. It's midnight where I am. I've been working all day and everything like that. But I promised I would try to get a video out. And when I promise you guys something, I'm going to always try to deliver. And so overall, things are looking good. We just want them to keep looking good. We're looking for a continuation at this point. All right. I will see you here in a few hours. And let's get it. Be relentless. Stay positive. Don't be negative. Just don't be negative. It drives me crazy. You got one life to live. You only got so much time to spend on this planet. Don't spend time being negative. Love you guys. Be safe. Be good. I'll see you on the flip side.